Mayuresh, good afternoon. Thank you for giving your time to ET Now. And as we speak, it actually is a good start to the week, and we have all the reasons and all the triggers. And we should say that the trigger which was missing, the direction for the market which was missing, at least we get that direction now. The FIs didn't give that direction, the earnings season didn't give that direction, but the latest announcement coming from Prime Minister Narendra Modi on the GST rate rationalization at least is one direction. What's your take, and how are you reading the markets at present?
Afternoon, Mansi. Always a pleasure to be on your show. No, two things. One, I think there have been a plethora of announcements that have happened in the last 2 to 3 days. One, I think the upgrade that happened in terms of India's sovereign rating on Friday was a very welcome positive news that came through. Secondly, in terms of expectations of the GST rationalization as we head towards Diwali, I think that is going to be a big boost as far as consumption is concerned. Obviously, I think nuances still remain on how is the expected loss, if I would say that, in terms of letting go this GST. How is that probably going to get recouped to a certain extent? And therefore, the overall dynamics in terms of our fiscal deficit numbers as well. I think that is to be seen. But again, I think to boost consumption is the ultimate R and the need of the hour, specifically when US is talking about tariffs. And again, I think if there is that additional 25% which goes off, and furthermore, I think if we are able to negotiate well with the US and even get that base rate of 25% lower, I think the expectations of a 50, 60 bips hit in terms of our GDP because of US tariffs, even that starts going lower. On top of that, because of all these measures and moves taken together, the expectation in terms of earnings growth expected to come through pretty smartly as we head into the second half can actually start giving earnings support to the market. And therefore, I think FDIs, FPIs who have been shying away for the market for a combination of these reasons put together will come back very, very smartly. Because again, I think as far as the placement is concerned, from a demographic perspective, from a corporate debt to GDP perspective, from an external debt perspective, from a corporate earnings perspective, India will stand out in a scenario where tariffs will still create a lot of uncertainty for most economies into the world, in the world. And therefore, my own sense is that the structural downside probably seems very, very limited for the markets. At some point of time over the next few months, FPIs, FPIs, FIs, FDIs will have to come back to India. Domestic flows remain extremely strong. Earnings should start making a decent comeback, and consumption should have a huge pullback as well, which makes us believe that India is probably one of the best placed markets in the world. So again, I think remain optimistic and positive on the economy and the India growth story.
Oh, absolutely. Remaining optimistic, and that optimism is actually looking good. And that's the way the markets are also reflecting the impact of all the announcements that we've heard over the course of the weekend. We're also being joined by Aditya Agarwal of Invest4Edu to understand a little bit more on the technicals of how to make sense of what we're seeing in the market today. Aditya, hi, good afternoon, and welcome to the show. First up, let's talk about Nifty, and then I also want to get your sense on Nifty Auto, because the kind of run up today we've seen in auto is crazy. It's something that we haven't seen in a very long time coming on Nifty Auto. So first up, just help us understand your general market sense. When do you think we'll cross that 25,000 mark on the Nifty and stay there firmly? And also Nifty Auto, the kind of move we've seen today, what are you making of that?
Afternoon, Sneh. Thanks for having the show. My sense is markets are a little buoyant today, but you also need to watch out 25,000 mark on the upside that continues to act as a major hurdle. Market's not going to go up in one way. You're going to see volatility again coming into the market. My own sense is around 25,000, you will see some kind of a selling pressure between 25,000 to 25,100, give about a 50, 60 point here or there. So between 25,000, 25,100, my sense is markets will find a little bit of a selling pressure again. Supply can come back again, and market can slide all the way back to levels of 24,400, 24,600. This gap up opening that we witnessed in trade today might not actually sustain for too long. So I think markets continue to remain in a range, just that the range has now shifted from ranges of 24,200, 24,600 to now 24,600 on the downside. and 25,100 on the upside. So the range has shifted on the upside. Slowly and gradually, you will see markets do inch closer to 25,100. But again, around those areas, you could see a bit of a cool off and a selling pressure. And why do I feel so? Is because the financials, which actually weigh a lot on the index, are still underperforming. And if you take a look at the way we have seen a kind of profit taking from the highs in Bank Nifty, that clearly shows that a bit of underperformance continues in the Bank Nifty until the time we take out 56,200 to about 56,500 decisively on the Bank Nifty. Nifty 2 could continue to remain range bound as is the case with Bank Nifty. Now, answering your question on Nifty Auto, yes, clearly that's like a massive up move that we're witnessing in trade today, and that we witnessed this after a decent bit of a consolidation in the autos from the month of May. We just witnessed 2 months of flattish consolidation, and today there's a massive breakout on the auto index. And be it a four-wheeler name or a two-wheeler name, everything is up and away and running. And my sense is this up move that we're witnessing in the autos is likely to continue. If I clearly look at the Nifty Auto Index, it looks like it's poised to test levels of 26,000 on the upside. And if anything, two-wheelers have just started to move. Look at Bajaj Auto, look at Hero Moto. After months and years of consolidation and underperformance, they are now finally outperforming. So the two-wheelers will continue to outperform TVS Motor, Hero Moto, Bajaj Auto, all three names. My sense, they'll continue to outperform. Then maybe the two-wheeler names, Mahindra Mahindra and Maruti will follow suit. So overall, it will be more of sector-specific moves that we'll see in the markets, while Nifty and Bank Nifty would continue to remain in a range.
Absolutely. Auto sectors topping the charts when we talk about the sectoral approaches, and can't miss Maruti Suzuki, a 10.5% upsurge at an all-time high, of course, on the back of the GST rate rationalization news which has come in. But we